have challenges, we have technologies. Welcome to the final event by ATSA. I'm Eleonore Balenci, journalist and facilitator for today's conferences. So we are together until 4 p.m. to attend conferences on ATSA's four favorite sectors: EdTech, Fintech, Green Tech, and Health Tech. And today, now we're going to focus on the Fintech sector. Don't forget that in addition to these highlights, you can meet each other using the B2B meetings module on this website. Mid-cap companies, SMEs, large groups and investors with needs, and startups supported as part of the ATSA can answer them. And if you wish, you can send us your questions using the hashtag ATSA Final Event on Twitter. For the FinTech conference, let's welcome our first guest right after this. And our first guest is Colm Lyon, CEO and founder of Fire.com. Fire.com provides business accounts that help businesses of all sizes access payment services and automate payment processes. With its technology, API, and regulatory licenses, Fire delivers solutions that make payments faster, most cost-effective and secure. From MasterCard, debit cards, and bank transfers to a host of API services, a Fire business account provides all the features of a premium business account, but with so much more. Fire.com is regulated by the Central Bank of Ireland in the EU and authorized by the FCA in the UK. Good morning, Colm. We are ready to listen to you, giving us your overview of the FinTech universe.
Great. Thank you, Eleanor. Good morning, and good morning, everybody. And thank you for inviting me to attend this great event today. I'm very happy to do so. As Eleanor said, my name is Colm. I'm sitting in Dublin, in Ireland right now, in my home, like everybody else, I'm sure, where we are still in a restricted mode during this time, hoping that things will open up shortly but in the coming weeks. But it's been a long journey for everybody to get to this point. What I'm going to do is just speak for a few minutes to talk about my experience in the FinTech sector and the big trends, if you like, that I see happening right now in the FinTech and in the payment space. I'm a practitioner in the industry, so in other words, I work within the industry, we set up businesses within the industry, and we invest into the FinTech and payment space. In particular, I work a lot in the payments arena of FinTech, so I focus very much on the payment side. And back in 2000, I started our first company, which was called RealX Payments, which was an online gateway for businesses who wanted to sell online. We were processing payments for businesses who were selling online. And we had offices in Dublin, in London, in Paris, and Amsterdam. And we had about 12,500 retailers who were using our platform to sell online. And in that, I would have learned a lot about merchant acquiring. I learned a lot about e-commerce, and I learned a lot about the challenges, if you like, that businesses have when they're trying to sell online. In 2015, we sold RealX Payments to Global Payments from Atlanta, a large US-based card acquirer. And we started Fire.com. And so I can tell you a little bit more about Fire later. Fire is basically a business that helps fast-growing companies with complex payment flows. So we make it easy for businesses to automate their payments. We make it easy for platforms to embed what we call accounts, payments, and cards into their own platforms that they can give to their customers. I also spend a lot of time in the UK working in the area of payments, and I sit on the UK Finance Payments Products and Services Board, as well as a number of other industry committees as well, particularly in the area of open banking. And in the UK, we would have seen open banking taking big leaps over the last 2 to 3 years as open banking and the PSD2 and the work that was done to bring open banking to reality in the UK has really accelerated. We also have our own early stage investment fund, and we're invested at the moment into about 17 or 18 early stage companies where we provide seed capital to those businesses, both in FinTech and outside of FinTech as well. Just 3 broad headings I would speak about, just what it was like starting the FinTech for me, and the regulation that is relevant to our sector and some of the trends that I see today. In terms of starting our fintech business back in the year 2000 originally, and then starting again in 2015 with another fintech business, it is really a really interesting market, is what I would say. Fintech and payments is a vast market, and it's a market that continually gets larger and larger as well. So one of the great things about being in payments and being in fintech is that you can have a niche business and concentrate on a very specific area within payments or fintech, which can actually end up being a very large business. So it is a business and an industry that is very attractive. It's very attractive from an investment perspective, and it's very attractive from a go-to-market perspective to be able to engage. It's an industry that traditionally was dominated by large legacy players, and therefore it is an industry that on the surface looks like it's very attractive for disruption and very attractive for change. So people like getting into fintech, people like getting into payments because of the characteristics, if you like, of the industry itself, and that there are new advances in technology all the time, which make it possible for people to be able to interrupt perhaps the value chain and to be able to look at horizontally taking services that traditionally may have been provided by banks, and now fintechs can provide those services directly to customers as well. It is an industry that attracts a lot of investment and an industry that attracts a lot of attention. And like any other startup, the main challenges that anybody has when they're starting out in business is, to try and get their product up and running and to try and get validation that from the customer that this is what they want. And is the solution that you're bringing to market truly solving the problem that the customer, or is it maybe something that is not strong enough yet because maybe the customer's concern and the customer's problem isn't quite enough for them to bite and for them to actually engage with you and to adopt the product that you have to offer. So many businesses that we see within the fintech space will come to market and they will attempt to validate their customer proposition, which is very sensible, obviously, and a very important step to take in the journey of building a business. And then the second challenge I think that businesses are often faced with within the fintech is how to scale. And how do you scale up a company, a fintech firm? And what is your scaling strategy? Excuse me. And linked to that is your distribution plans. So will you be selling directly to people? Are you selling to consumers? Are you selling to businesses? If you're selling to businesses or consumers, will you do so directly or will you do so indirectly? And certainly within the fintech market, we've seen that many companies that survive on indirect distribution can do extremely well, where they can scale and scale in a very significant way. So I think starting a fintech is something that certainly I have been involved with over my career. It's an industry which I really enjoy working in. It's an industry, as I say, that offers great opportunity. But like every other startup, you have to be able to validate your product, and you've got to be able to find a strategy that enables you to be able to scale that company. The second area is the area of regulation. And one of the key decisions for every fintech to make along the journey, particularly if you're in the payments arena, is are you within regulation or not? So are you going to become a regulated firm or are you going to become a technical service provider? And this is one of the key decisions that often has to be made up front by a startup. And one of the things we have found is that it's very difficult sometimes to make that decision. And getting good advice in relation to what is sometimes called perimeter guidance. And perimeter guidance means, like, are you within the net of regulation or are you outside? And it can be a challenge sometimes for small firms to be able to assess, is the product that they're making, does it bring them in to the regulatory net? It's a very important question to ask yourself when you're starting out in the fintech and when you're starting out in payments, is will I become regulated? If I become regulated, it means that I then have to run my firm subject to the regulations of that license that I get. And that regulation applies equally to you as a 7-person startup, say, as it would to a company with 70,000 employees. So in some jurisdictions in Europe, you cannot become, for example, a small payment institution. You must in fact apply for a license to be a payment institution from day one. So therefore, the challenge for many fintechs, if they are regulated, comes as how they conform to that regulation and continue to grow their business in a controlled way at the same time. So you've got to be able to grow your business in a controlled way while not compromising on your compliance and not compromising on your commitment to the regulation and your obligation to the regulation that you have. So it's a very important aspect in a firm's strategy in the fintech and payment space is to decide if you are going to become regulated or not. Obviously, being regulated, I believe, adds strategic value to a firm. And if you are regulated and if you're using your own licenses to be able to process payments or process transactions for your customers, then I do believe that this is a strategic advantage for you to have. Although the cost of getting the license may be prohibitive to some startups. I would also say that the impact of Brexit has been very significant on the development of the fintech and payments market within Europe. The lack of passporting to the UK now and from the UK to Europe for fintech firms and for early stage companies is a real shame. And it will mean that companies perhaps in their early years will now decide to operate in the UK or the EU, but perhaps not both. And this is a great shame, I think. And it's something that, like, hopefully in the years ahead, we might be able to see if this can change. We are seeing that, and we'll talk about it maybe in the panel later on. We're seeing that some of the changes that post-Brexit, and we're seeing a divergence, if you like, between where the UK may head now in the area of fintech and payments and the regulation that it supports and where the EU might go. And finally, I just want to mention some of the big trends that we're seeing, and certainly where we're very interested from an investment perspective in terms of what we see happening. One of the big trends, as technology has advanced and as regulation has advanced, particularly with the second Payment Services Directive that took effect in Europe, we are seeing the rise of what are called account-to-account based payments. But this is the ability for people to pay directly from their accounts without using their cards. You'd be familiar with some of these are national solutions, and increasingly now there is talk of some pan-European solutions that are coming down in this way. And these payment arrangements would be facilitated by large financial institutions, large banks, who would collaborate together to bring out a single app that would allow all their customers to pay both in store, to pay other people, and to pay businesses directly from their bank accounts without having to use cards. This, we believe, is a big change to the industry, and it is also linked to what we call open banking payments. And open banking payments, particularly in the UK, has become a very attractive way for businesses to get paid because it enables those businesses to get paid directly from people's bank accounts. And again, these services are all brought about because of enhancement in the technology, development in the technology, and also developments in the regulation, which has facilitated the entrance of new players into the market. So we see this trend of account-to-account based payments within the EU and the UK as a very important trend and one to keep an eye on. We also see that businesses are going digital faster and faster than ever before. And COVID-19 has particularly been, I'm sure, a catalyst in the drive for the digital adoption that businesses are making. And so as businesses go digital, what did they need? They were going to need more digital services, more digital payment services, more digital accounts, more access to their accounts and to their payments via their own applications and their own system, which leads to the other trend, which we believe is imminent, which is that of embedded finance. The ability for people and businesses to be able to access their financial services, products and services that they have via third-party applications. So we see that this will become a big trend into the future as your bank account basically and all the payments and the cards and everything that's linked to that bank account, that you will be viewing this through third-party applications rather than logging into your own bank's portal in terms of what you're looking at. So it's a great industry is what I would say. I think the payments and the fintech space is an industry in which I've operated all of my career. It's an industry where we have built businesses and sold businesses, and it's an industry in which we're still starting businesses and investing in businesses. So it's an exciting area. It's an area, as I say, that is dominated by change, in an area where, you know, if you put your best foot forward, if you like, you can get your customers to validate the proposition. You can find yourself a distribution strategy, and perhaps, you know, if you can embrace the regulation, you'll be able to build yourself a very large and a very attractive business from an investment perspective. Thank you very much.
Thank you very much, Calm. You stay with us because we're going to continue talk about fintechs with our next panel. It's time for a new roundtable. Now let's welcome our two new guests. First, Connor Lydon is with us. He's the founder and CEO of TrustApp, an online escrow-style payments company. Connor founded TrustApp in 2016 after graduating from engineer in UCC. He won the local and regional sections of Ireland's Best Young Entrepreneur in 2018 and was named in Ireland's top 30 under 30 for the last 2 years. Welcome, Connor. We have also with us Damien Guillaumont from SoShop.club, self-taught and an entrepreneur at heart with several business creations, some of which are still leaders in their markets. Damien is a CEO of Payment, managing more than 20 people, very involved in each project, both on the technical and legal side, marketing and customer service. And unfortunately, we were supposed to have Ollie Walsh, co-founder and CEO of Pipit Global, but he couldn't make it today, so we'll be with Damien, Connor, and Com for this discussion. Welcome, everyone. Thank you for being with us. First of all, can you present, I did a little bit in my introduction, but can you present your activities? Let's start with you, Connor.
Sure. So, as you said in your introduction, I'm the founder and CEO of TrustApp. So what TrustApp is it's a transaction platform that's designed to facilitate transactions between people who don't know each other. So peer-to-peer or business-to-business, business-to-consumer. So what we've done is taken the concept of escrow and tried to apply it to modern use cases. So we build milestones around common transaction types and manage the transaction from start to finish.
So what are the advantages of escrow type solutions in a crisis?
Yeah, well, I guess, in a crisis, like, the pandemic that we're just hopefully coming to the end of, it breeds desperation. So, you look at people or governments scrambling to buy PPE, and then naturally, people, they are more likely to take risks when it comes to those transactions. And bad actors will manipulate this. So I think, the huge advantage of escrow is that a third party are managing these transactions. So instead of the buyer potentially taking the risk and sending too much money in advance, or even from the seller's perspective, if they're going manufacturing something without receiving a deposit, it does happen both ways. So I think because of the desperation and because of the urgency, it's even more important to have a third party managing that and ensuring the transactions happen safely from start to finish.
Mm-hmm. Speaking of pandemic and health crisis, Damien, can you tell us how to restart offline spending post lockdowns, and can you present also SoShop.club?
Yes. So first of all, I will tell to everyone that my English is my English, so I hope it will be correct enough, but I will do my best. So SoShop.club, we propose a bank solution, a neobank. So we propose an application, a bank application with the MasterCard to pay less than the traditional bank. It's the first proposal from us, but we are also the first solution put bank and cashback in French, because in France we have something a little bit bizarre. The cashback just started right now. I know it's not the case in England or United States. The cashback exists since long time ago, but in French we are the first one to propose this. So what we propose post lockdown to our clients, it's the solution to bank solution, but also to have some discount and increase buying power with our cashback. And we are also a good solution for merchant partner, because we propose to them to bring our client directly to them.
And do you think there is a high spending potential to come?
Sorry, I will ask.
Is Bastien with us today?
Yes,
Bastien is with us to maybe answer this question. Bastien Donadieu. So, Bastien, could you answer this question? Hi, thank you for being with us. Do you think there is a high spending potential to come?
Yes, because before the pandemic, we saw an evolution of the consummation. I don't find my word, but
Consumption, yeah.
During lockdown, the behaviors of consumption changed, and for now, more online spendings. We can see more online spendings than before. And this is now important for us because of the cashback and the B2B solution we offer to our merchant partners. As we are a web-to-store solution, we can bring the online payments to the store, and this is very big arguments for our merchants.
Mm-hmm. Thank you, Bastien. Now, back to
Thank you, Bastien.
Connor. Back to you, Connor. With the acceleration to digital post-COVID, what are the effects that you noticed on scams and fraud?
I think, I guess, when the brick and mortar stores were forced to close, a lot of demographics who wouldn't be used to transacting online were forced to. And naturally, then they wouldn't have been as digitally literate, wouldn't understand, say, some of the risks that that posed. And there was a massive increase in scams and fraud, since the pandemic started. I think, we even saw it in our own users, the demographic. The average age of our users would have increased over the last 18 months. What's interesting as well is that studies, I think, show that a lot of those people won't go back either. So, what that means for the brick and mortar stores is probably not great, but as people become more digitally literate, more of these transactions will happen online. I think for scams and fraud, it is similar to kind of, in the crisis, when you have people who aren't used to transacting that way or really don't know what's happening, you're going to get people manipulating that. So again, it kind of shows the use case for these more kind of modern solutions that Colm referenced in his talk as well, where they make these transactions easier for people to do and safer for them to do as well.
And maybe I can ask a question to you, Colm. With your experience in finance, what's your view on the post-COVID world today?
I think as the speakers of Connor and Damien are saying, certainly when the pandemic struck, there was a very clear and a drop in business volume. We all know that. And there has been a gradual return to post-COVID volumes at this time. Talking to some of the large credit card and debit card processors across Europe, from what I understand is that the volumes are basically at pre-COVID levels again. And yet this is despite the fact that many travel and hospitality industries are still not fully operational at this time. So I think that as Conor said, the volumes are certainly recovering, and they will continue to recover. And I think that the businesses that are really hardest hit obviously are going to be the travel and are going to be the hospitality sector. And I think there's a potentially a long recovery tail for certain industries hit by the pandemic, and that would be certainly one of them. But for other industries within the economy, like the pandemic, if you like, hasn't hurt them in any significant way. Mm-hmm. So and I think that's where people are looking then at digital and finding that they're attracted to digital. It makes more sense. But as Conor said, there's also risks associated with that, which people have to make sure that they can overcome.
Yeah. Thank you, Colm. Damien, how to satisfy the post-lockdowns needs for all in B2B and B2C?
How to satisfy the post-London, in fact, we're offering a B2B web store solution with a cashback, and we offering also a B2C solution opening to everyone without any revenue condition, and we offer discount whole years long and to increase the buying power. So this is a proposal for the B2B to B2C and to B2B2C.
Good to know. Thank you very much, Damien. Connor, in the past 18 months, how peer-to-peer transactions have evolved, in your opinion?
I think very similar to, other types of transactions with the acceleration to digital. I think the first thing to kind of note is most of these transactions happen from a marketplace. So people, buyers and sellers, find each other on some marketplace and agree to transact, where traditionally they might have met up in person and used cash. Like everything else, that is now going online as well. I think marketplaces are realizing that they have to do a lot more to facilitate transactions on their site and to provide a safe or a viable alternative to cash, or they'll lose their revenue stream, which generally would be sellers paying to place listings on their ads. And if the sellers can't sell their items because there's no digital solution on the marketplace, then they'll go elsewhere and they'll list their items elsewhere. So I think marketplaces realize that they have to make this change, and that's kind of something we're working on at Trust App, where we're partnering with marketplaces and facilitating, end-to-end transactions on their sites. So they can integrate via APIs and do that. And I think that's something that isn't going to change. I think that's a permanent change now that's happened. I think people aren't going to look back. I think generally a lot of people will be cautious about in-person transactions anyway. So this has just accelerated that.
Now, looking forward, Connor, in the short and long term, what are your next steps at Trust App, the next objectives?
Well, I think, as I was saying there, a lot of these marketplaces are, the time is now for them to kind of move towards the transaction, as they would describe. So if you take, the example of a classified marketplace that essentially all they do is connect a buyer and seller, and the transaction doesn't happen on their domain. They know that they have to move towards facilitating those transactions or they'll get left behind. So for us, the current focus for the next kind of 18 months, 2 years, is to try and partner with as many of these marketplaces as we can, help them facilitate transactions, and then we'll kind of look at expanding out our reach from there. We know that we have a really good solution for them right now, so that's kind of our focus for the short term.
And maybe I'm sure you've heard about the EPI, the European Payment Initiative. So will it be a challenge for you or for your customers in the next months, because it will be a unified payment solution all around the EU?
No, I don't think it will be. I think if anything, it'll make our life a lot easier. Like I'm sure Damien or Colin has experienced, like any of these changes are going to improve the efficiency of how this all works. So no, I don't foresee it being a problem at all. I think, if anything, it'll help, and it'll mean that this acceleration to digital, it continues, and if people are finding it easier than they have before, they definitely won't go back to in-person risky cash transactions.
Do you agree with that, Colin?
Yeah, I mean, the API is a really interesting initiative, right?
Yeah.
It's, I think it's 33 financial institutions at this point in time who are part of that initiative. And it is, it obviously has some way to go yet.
Do you think it will work? Because
I think
some initiatives
yes and no.
have already been launched in the past, and now we're talking about EPI, thinking that it will work this time.
Yeah, I think the cynics would say it's the third time that we've tried this in Europe, right? What's changed in the meantime? I think technology has changed, right, a lot, and the access to the account has changed, and the ability for people to be able to, and I think the consumer adoption of accessing your account directly on your phone at the time of the purchase of a transaction is going to be quite comfortable. I don't think consumers are going to be put off by that. And so the provision, as I understand it, the provision of a card as well alongside that with the app, I think it could make it more workable. I think the interesting dimension to the EPI is the extent to which they potentially can disintermediate open banking players from their network, which I think could be to their disadvantage. So I think if EPI becomes something which competes with like PISPs who are initiating payments via open banking, then I'm not sure that that's a healthy outcome for everybody. And I would have preferred to have seen a more inclusive, if you like, early stage development of the EPI concept, so that we could kind of see, is there a role for TPPs, for example, in the EPI model. So I think if it becomes a development that is, if you like, driven more by protecting your business rather than trying to embrace the changes, I don't think it'll do as well as it could. So I think that the jury is still out for me as to whether it will work or not. I think there are aspects of it that certainly go in its favor, but there are, as I say, other dimensions to it which I think could potentially hold it back. But I mean, the general concept of account-to-account based payments, though, as I mentioned earlier on, is one which I totally see as becoming very, very real for people into the future. If it's not EPI, and if it's not open banking payments, it might be, the one after that would become the one that will stick.
Mm-hmm. Thank you very much for giving us your perspective on this, and thanks to Damien and Connor for your opinions on the future trends of fintechs, opportunities and challenges in the post-COVID world. Now we are going to take a break on the final event to have lunch. We are hungry right now, and we'll get back here at 2 p.m. to talk about innovation serving the planet. The green tech sector contributes to change the economy all around the world for more sustainability. So we're going to see how green tech startups disrupt the industry sector. One last reminder, you can meet each other using the B2B meeting modules. Don't forget, it's on our website this afternoon and tomorrow until noon. There will be mid-cap companies, SMEs, large groups and investors with needs, and startups supported as part of the ADSA ATSA, and they are going to answer you. So see you in an hour, and thank you for following us.
Thank you.
Bye-bye.